Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
Hello everyone, I'm Heidi Butler and welcome to our Q1 2023 Investor Livestream. We will be taking questions via the Q&A option at the bottom of your screen. Questions will be answered at the end of the presentation. Your microphones have been muted. In considering the performance information discussed today, prospective investors should bear in mind that past performance is no guarantee of future results, and that there can be no assurance that projects will achieve projected results. In addition, actual future conditions may require actions that differ from those contemplated at this time, and prospective investors are cautioned not to place undue reliance on these projections. This presentation includes certain non-GAAP financial measures. Certain statements such as believes, anticipates, plans, intends, expects, target, preferred, and words of similar import constitute forward-looking statements. Such forward-looking statements involve known and unknown risks, uncertainties, and other factors that may cause the actual results, performance, or achievements to be materially different from any future results, performance, or achievements expressed or implied by such forward-looking statements. On this live stream, we're joined by John Kabrowski, co-founder and president of real estate, and Jamison Manwaring, co-founder and CEO. Before we discuss the current market, we'd like to cover some important items. Distributions are available on the 10th of each month and are found under the cash available on your investor dashboard. K1s are due March 15th, and you'll receive an update when they are completed and uploaded to your investor dashboard. We love keeping you updated and informed. Please follow us on your preferred social media platform to stay up to date on important items in the news, the progress of our projects, and investor events. One of my favorite ways to connect with our investors is through our podcast, Kiss My Assets. We spend time discussing multifamily trends and delving into other relevant topics. We also love having our investors come into the studio and share their stories with us. If you'd be interested in joining us for an episode, give us a call or email at marketing@neighborhood.ventures. Now I'll turn it over to Jamison.
Hello, everyone, and thank you for joining us. We are excited to share some of the things we've been working on at Neighborhood Ventures. We are thrilled to officially announce the launch of NV REIT, an SEC-qualified Reg A offering. This is a unique type of crowdfunding offering that Congress passed a few years ago. This allows U.S. residents to invest 10% of their annual income or net worth, whichever is greater, into NV REIT. Accredited investors have no investment limits. We have spent the past year developing and working with the SEC to bring this offering to you, our investors. NV REIT gives you the opportunity to invest in a diversified portfolio of multifamily properties. NV REIT will primarily invest in cash-flowing properties that we plan to hold for 10 or more years. Most of these properties will be venture projects that our team has previously transformed and stabilized. But rather than sell these properties to a new owner, we will now be able to hold them in the REIT for years to come. As these properties increase in value, investors will capture 80% of that upside. This is reflected in the value of the NV REIT share price, which is updated every quarter. As I mentioned, we plan to hold each asset for 10 plus years. And when a building is sold, we will reinvest the proceeds into new projects. We will invest a smaller portion of capital into developing projects, including new ground-up apartment buildings and properties that need to be renovated. These projects will pay a fixed double-digit preferred return to the REIT, which will help drive higher overall returns for investors. By having a diversified portfolio of assets that include stabilized, cash-flowing properties and some higher return developing projects, the NV REIT offers a well-balanced portfolio that can generate strong monthly cash distributions and future upside from appreciation for investors. Now I'll turn it over to John to discuss more of our property investment strategy for NV REIT.
Thanks, Jamison. I'm also very excited about the next step for the company. The REIT will allow us to hold projects we like while enabling our investors to receive consistent cash distributions and benefit from the property's equity appreciation. Let me share more about my vision for our projects. Our properties will primarily be in Arizona, as well as the Mountain West and Sunbelt regions. We expect that over the next 10 to 15 years, these areas will see strong population growth, job growth, and wage growth. In these markets, we look for properties that are in core and core plus areas that are walkable and near public transportation with employment centers. Our niche is medium-sized buildings with an average of 50 to 200 units. These buildings are often too large for individual investors, but smaller than what large institutional buyers often acquire, which gives us an advantage. All the properties held by NV REIT will be stabilized, cash-flowing assets. We'll invest a smaller portion of our capital into developing properties for a fixed preferred rate of return. These developing properties include our traditional value-add renovation projects and will include ground-up construction projects.
We believe multifamily will be strong for the next decade and beyond, especially in the markets we have identified. Macro trends such as millennials' desire to rent for longer, as well as a higher number of retiring baby boomer generation opting to rent, will drive demand for multifamily for the next 10 to 15 years. Unlike our current projects that have an expected sell date, NV REIT plans to operate for many years into the future. When a building is sold, we will use those proceeds to purchase new properties. Investors can redeem after the first year, but it isn't recommended. Redeeming shares means we will facilitate the transfer of shares to another investor. There are costs for redemptions, and we encourage investors to let their returns compound over time rather than trade their shares, especially in the first few years of the REIT. We plan to announce NV REIT's first acquisition in the next few weeks. Since the first property is generating cash flow, we expect to begin 5% cash distributions beginning in April. NV REIT is open for investing today with a minimum of $1,000. You can find the offering page on our website and place your investment there. And please reach out to us if you have additional questions. Now I'll turn it over to John to discuss what we're seeing in the multifamily and broader economic environment.
We've seen an increase of millennials who consider themselves forever renters, growing from 13% in 2018 to 25% in 2022. They want the lifestyle that comes with lifelong renting, including the ability to relocate for work, extra amenities, and being close to employment centers. All the perks that multifamily offers. Another factor that's attributed to the forever renter trend is the increasing cost of buying a home. We've all watched the prices in the housing market explode over the last few years. Although there was a plateau in 2022 in response to the Fed increasing interest rates, there hasn't been a major drop in prices, nor do we expect one. However, it's created a new class of renter by default, leaving many Americans unable to afford a home and maintaining the demand for multifamily housing. We anticipate a moderate recession this year, but we don't expect it to impact Arizona and Sunbelt markets to the extent it may other areas of the country, with less job growth and population growth. Arizona leads the nation in job growth, therefore creating demand for its housing and rent increases. In November alone, Arizona added 7,000 jobs to the market. As an example, the Taiwan semiconductor plant alone is boosting our job market, creating 10,000 jobs in the construction sector, and will add nearly 15,000 jobs when it's completed. These jobs will further the demand for multifamily housing in the Phoenix market over the next 10 to 15 years, and we expect to see similar trends throughout the Sunbelt region. Economists have pointed out that even with our robust construction activity, Arizona will be short 270,000 housing units over the next 10 years. Now let me shift to our current projects. We have 3 projects under renovation. First, our most recent project, Venture on 12th Place. Our construction team has improved the courtyards with landscape pavers and added skylights in the stairwells. We've gone through and added new flooring, paint, and renovated walk-in showers to 12 of the units. This month, we will begin installing the new bathroom fixtures, appliances, and wash and dryers will be installed in the units. We are turning the first group of units over to the leasing team this month. We expect Venture on 12th Place to be cash flowing in Q3 of this year. We've seen a lot of progress up in Flagstaff at Venture on Route 66. Our team has rebuilt and upgraded the showers in 22 of the units. We've completed all of the interior renovations on 6 of our units last month, and we're expecting additional 8 to be completed by the end of January. The furniture for our first 6 units will be delivered at the end of this month, and we're expecting these units to be available for guests by February. We're expecting Venture on Route 66 to reach the cash flow stage towards the beginning of Q3. We've now turned over the interior construction to the Dunkin' Donuts contractors at Venture on Broadway. All the exterior work is completed, and Dunkin' Donuts should be up and running in the next 60 days. The new parking lot, curbing, concrete, and asphalt work was completed last week. We have 2 fully executed leases with Burger Rush and Dunkin' Donuts. With the neighboring luxury apartments in lease up, the opening of our Dunkin' Donuts, and the resulting increase in drive-by traffic, we expect to create more competitive environment and find a tenant for our 3rd suite.
Renovations are now complete at Venture on Central, and it is 63% occupied. The average rent is $1,840 per unit, while the average rent before our renovations was $1,000 per unit. We expect Venture on Central to be stabilized and cash flowing in the second quarter of this year. Venture on Eldon is now stabilized and cash flowing. Venture on Eldon is 100% occupied. When we purchased this property, the average rent was $950 per unit. We expected to bring the rent up to $1,500 per unit after renovations. The current average rent now is $1,900 per unit, more than doubling our original estimate and surpassing our expectations. Venture on Country Club is running very well as we approach peak season here in Arizona. The property is now fully renovated, and we expect over the next 4 months to have really strong occupancy on our vacation rentals. We continue to work with the city, and we're seeing great progress with the rezoning process. We expect the rezoning to be completed by the summer. Venture on Williams is 100% occupied. When we purchased this property, the average rent was $980 per unit, and we expected the rent to reach $1,400 per unit after renovations. We've now exceeded that goal, and our current average rent is $1,565 per unit. Venture on Mountain View is also 100% occupied. When we purchased this property, the average rent was less than $900 per unit. After our intelligent renovations, current average rent at Venture on Mountain View now exceeds $1,200 per unit. Each of our cash flowing properties are paying investors a 6% annual distribution. We were also excited to announce that Venture on 19th was sold in December, and all investors have received their principal investment and 12% preferred annual return. Venture on 19th investors can find their final payout on their investor dashboard.
Thanks, John and Jamison, for sharing. We are so excited for these updates, and we've gotten quite a few questions from investors. The first one we've received is, are you planning to still have individual projects going forward?
You want to
Yeah.
field that?
Yeah, great question. We are absolutely planning to continue to do individual projects. The REIT is another way to invest. And so we've got a lot of feedback from investors over the years who want to keep their funds working, keep their funds invested after we sell a project. And so this is just the next phase for us, but we've always planned to continue to do these individual projects that people can invest in independently. Most of the time, they'll only be open to Arizona residents. We may do some of the bigger projects where we also open it broadly, but this is just another option for folks. So kind of to that point, I might be jumping the gun a little bit, but we can talk a little bit about when our next project is coming up, and John could touch on that.
That's great. That's one of the next questions here. Do you have any other projects in the pipeline?
We are actively looking right now. So we're looking at both redevelopment sites, so ground up right now. It's a whole different type of analysis, whole different type of timeline. Very exciting because we get to build and control the whole process. And right now we're running through probably 3 candidate properties we're looking at. Just throw the obvious out there. With the change in interest rates, it makes it a little more difficult to underwriting these properties and how we figure out the exit cap rate. So that's been, the struggle that everybody's had right now is trying to figure out how to underwrite these properties in the higher interest rate environment. along with us. So we're looking.
And for us, we think we're going to be opportunistic for some of these projects that maybe started and now they're backing off a little bit, or projects that don't make sense. They made sense a year ago to someone, now they don't make sense. But for us, we have a fresh view to come in and do something new. So, in any market like we're in, where there's a change in the market, where the market goes down, there's actually a lot of opportunities, and that's what we're going to be looking for right now.
Yeah, it's still a great market.
So kind of on that, it said the next question came through. You mentioned that you're looking at this REIT investing in properties outside of Arizona. When do you plan on expanding outside of Arizona, and what is your plan for how to execute that piece?
I can start and John can piggyback. So we're primarily going to start in Arizona. This is the area that we know really well. Real estate is local. And one thing John has reiterated with me over the years is we need to have a deep level of expertise in the market and in the asset. And so we've been kind of nudging our way into other markets. We have a couple projects in Flagstaff, which we also know well. We're going to do it slowly. Well, as we mentioned, the REIT plans to operate for a long time. So I think as you look over the next 5 years, if we're 5 years down the road, the REIT will have a few projects outside of Arizona. The first few years will be primarily in Arizona, and we'll expand in those other markets as soon as we have a foothold there. We have a team member who knows that market well. Maybe that's John. John goes to Texas a lot for family reasons and other things. So he's in that market, and he's also in a lot of markets with his other company, ABI. I'll let him speak to that, but we won't jump into a market haphazardly. We're slow. We'll take our time, and over time we'll get more diverse in the assets the REIT owns across different states.
Yeah, and I think the other part we want to point out is we have to disclose in the REIT and the way we're operating it where we're planning on looking in general. So we have to be very broad when we first announce that, and the way we constructed the documents for it. So,
that's right. Yeah.
So, and the bottom line is we know Arizona. We know Arizona well. I have offices for ABI in some other cities and states, mostly Sunbelt, and that's where all the growth is. And we're probably going to venture into those kind of markets where there's strong growth, strong income growth, strong population growth, buildings we understand, regulatory environments that are conducive to what we're doing is really another big one. And they're out there. I mean, I personally like Texas. I also like Colorado. But we want to make sure we get everything figured out here and keep doing as well as we can, and then we'll venture out a bit.
And one of the things that doesn't change with the REIT is that we tend to be conservative operators. We'll pass on some deals that maybe we should have jumped on because we don't like some of the aspects about it. That's going to continue. So we would rather be a bit more choosy, a bit more picky. We have a long-term mindset, and that will continue. That mindset continues with what we do with the REIT.
Well, we've got a question here from a couple different investors, and so I'm going to combine them. It's all about Eldon. The first one is, it appeared that venture on Eldon, took longer in the remodel phase. If so, would you elaborate on why, and what, if anything, was surprising or uncontrollable? And then the second kind of follow-up question is, are you planning on having that cash flowing in the next few months?
Good. I'll answer that one.
Yep.
So I'm always quick to point out things. We're based here, and we brought our construction guys up there, which worked out well because we were able to cut the costs of the local market down considerably to do the work. 3 factors extended the time it took to get the work done. Number one, the weather. Once you hit up against the cold weather and the snow, it's hard to do anything up there, including even get dumpsters and dump dumpsters. It's a really challenging environment. Second thing is, we had a number of units that we thought we'd be able to vacate sooner. And one of the things we have to be conscious of, we have residents, and Flagstaff is a very tight market for leasing. So it was tougher to give people notices and have them find replacement properties. So because of the amount of the depth of construction we're doing, new washer dryers, plumbing, air conditioning, things like that, we weren't able to, it's the best way to say it. It wasn't fair for us to do renovations inside of a building if there's still one resident in there. So we had to give people more time to find other places. And then the third thing is simply just supply chain. Things hit us right then. So even when we were working on it, we got caught right into the tail end of some of the supply chain glitches. So getting materials up there, getting materials in general, that slowed us down. But the good news is, the silver lining is that our rents are significantly higher than we thought they'd be, and we're full, and it's running perfectly well.
Yeah, when we purchased the property, we thought rents would be $1,600 per unit. Our average is now approaching 2,000 a unit.
Yep.
We're full, 100% full. I love seeing that now. And we are announcing today that we will start distributions, cash distributions, next month in February. That's for the cash flow for January. So now that we're full, the property cash flows and we send all that money back to investors. So excited that that's now cash flow.
And what's the rate that we're going to be sending that back at right now?
6%, 6% annualized rate beginning next month.
Perfect. Another question that came through, you talked about several active projects. Are those projects being inserted into the REIT? If so, what happens to the 12% estimated return and the estimated 3-year duration? For example, venture on 12th Street.
Yeah, so this is a great question. We're having a lot of great questions today. So each project will be looked at independently. Not all of our projects will end up going into the REIT. We're really kind of going to cherry pick a little bit and pick the ones that we really love and want to hold long term. We love all of our projects.
I'm very happy with them.
We like all of them.
In fact, there's a couple of them we sold I wish I didn't sell.
Right.
But we have to sell and generate the returns for everybody.
Yeah. So we will look at each project on a project by project basis. The REIT will end up holding about 10 to as many as 15 projects at a time, but it won't be all of our projects. So if you're an investor in our current project, in any of those projects, you get that 12% return. 12th place will be cash flowing, most likely third quarter this year. And then we'll let it continue to generate cash flow for the investors in that project. We will announce our first project, our first acquisition, where the REIT essentially buys out the equity here in the next few weeks. And those will be announced individually as they come up. All the investors, of course, will get their principal back, plus their 12% preferred return. And then they have the option to reinvest that or roll that into the REIT. But each time that we acquire, the REIT acquires a property, investors have that choice. Do I want to keep it in the REIT, or do I want to keep it in by putting in the REIT, or do I want to take my cash out? It's up to them. And we're excited to announce that project here in a few weeks. And I think that investors, if you have more questions, because these are great questions with the REIT, it's a little different than our individual projects. So we've talked a bit about that today. Go on to the offering page. There's an active FAQ, interactive FAQ. Ask the questions there as there's more, because we want to help everyone understand it. At the end of the day, it is fairly simple. The biggest difference is you're going to be investing in a diversified pool of assets rather than one. And from an investment standpoint, diversification is always something that you're after when you're looking to diversify or looking to invest your money. So you're diversifying your investment across assets. And then the other part is you can invest at any time. You're not waiting for a project to come up. And as I mentioned, the REIT is open right now, today. We already have about 30 investors who've come in since we announced it the last few days. So it's open now. That's one of the benefits of it. And we're really excited about it.
Yeah, I know over the last little bit, we've had quite a few investors ask us when our next project is coming, This will allow us to always have a project available for them to use. So this is great.
I'm trying. We're out there we're out there looking actively. Yeah.
Well, we've got a couple questions that'll kind of sit into each other. The first one is, how do I transfer my cash available on my dashboard into the REIT for my investment?
Yeah. So you have the cash available button on your investor dashboard. It's really fun, exciting new feature that we've added to your investor dashboard. If you want to transfer that into the REIT, send our investor relations team an email. That's Heather at neighborhood.ventures, and she can transfer that into the REIT. But you will go in and create the investment online just like you normally do. then will they select ACH or the wire transfer?
Yeah, so you can either reach out to Heather directly and she'll help you get it all taken care of over the phone or via email. Or if you go and start it yourself, you can go ahead and select wire transfer. Just hit submit and then send her a message. She'll help you get
Yep.
that transfer taken over.
So that would complete the investment online.
Yep.
And then instead of wiring the funds, we'll transfer the funds for you.
Yep, exactly that. Another question that came through, when does a REIT end? When do I get my money back? Kind of with that at the same note is, what is the redemption qualifications over the first few years?
Yeah, so you want to think of investing in the REIT like you invest in a public company. So there isn't an end date to Apple. You know, if you own Apple stock, it's like, when's Apple going to close? It doesn't close. It goes, forever, and hopefully it continues to go up. So when you invest in the REIT, you're investing for more the long term. There isn't a 2 or 3 year term where you're going to get your cash back. The first year, you want to know that you're putting your money in and you can't get that cash back. And part of the reason is, real estate is not a liquid asset. And that's one of the things I really like about it, is that it's a fixed asset. If our investors want to get funds out of that asset, we literally have to sell the building. So you have to know going in, the first year, you won't be able to redeem or get cash back for your shares. There are also penalties if you do that in the first handful of years that are a little higher than normal. So you want to plan on holding the REIT for at least 4 years. If you do need to redeem earlier than that, you can. That typically happens if there's a death in the family or some other major event, you can. What that actually means is if an investor wants to get their redemption, we will have someone else purchase your shares for you. So you let us know, and we end up having a new investor that instead of that investor buying new shares, we will transfer those shares for you. So there is always going to be a little transfer fee, a redemption fee when you do that. But just keep that in mind. The first few years, you don't want to plan on pulling your money out. Where this really works for folks is if they just let it compound, let it grow. You'll stay informed and see all the properties that we're acquiring, and that is also going to be really fun as we acquire those properties. Did I answer that question?
Yeah, you did.
Yeah, I think that's right. Good.
Another question that came in, can I invest through my IRA into the REIT?
Yes. Short answer is yes.
Great.
$1,000 is the minimum investment. So just keep that in mind, but you can definitely use your IRA.
Great. Is this REIT available to both accredited and non-accredited investors? And if non-accredited investors are allowed, what are the qualifications?
Yeah, good question. And yeah, the other thing I want to point out is this is open to anyone nationally. So we've largely had only investors in Arizona. So this is exciting for us because now we can bring, friends and family who live outside of Arizona who wanted to invest. Now they can invest with us. And so this is a great step for us. So if you're an accredited investor, you typically have a big net worth or a big income. Those folks can invest as much as they want, 100,000, 150,000. For the majority of our investors, you can invest 10% of your income or net worth. So whichever is greater. So let's say you're retired, you don't have any income, but you have 250,000 in stocks and bonds. You could invest 25,000, 10% of your net worth. Or let's say you're earlier in your career and you're making 100,000, but you don't really have a net worth. You can still invest 10% of your income, which would be 10,000. So it's whichever is greater. And these are all mandated by the government when Congress passed the laws around this crowdfunding offering. So 10% of your income or net worth. So it's really good. In Arizona, it's more simple. You can invest 10,000 per project, no matter what. But this is now a national SEC regulated offering. So those are the requirements.
Another question we have here, is there any advantage of getting in on the REIT pre-purchase of the first project or after you announce or add the first project to the REIT portfolio?
Yeah. Sorry, John, I feel like I'm talking a lot, but
No. This is the new big thing. This is pretty exciting. So you got to answer these questions.
There's the advantage of investing now in the REIT is you can begin to accrue your returns today. And we as I mentioned, we expect to launch to announce our first acquisition in the next few weeks. And with that acquisition, we'll start doing distributions in April. So if you want that first April distribution, you need to basically invest sometime in February. Because those distributions are paid for the prior month. So that's kind of the advantage. If you don't know if you want to invest yet, just stay tuned. We'll have some of these new announcements. The new project we'll announce, and then I think it'll probably help make some more sense. And you can invest anytime. We don't have a high pressure approach at all. And the sooner you invest is when you start accruing those returns.
This one might be a little bit more for John with some Jamison in it. Given that some investors who might want to reinvest after the sale into the REIT versus others who might want to cash out, how do you strike a balance in ensuring a fair buying selling price, if you will, of the properties that the REIT will acquire?
Yeah. So if this is about the REIT,
right?
Okay. So the way that's done is every quarter we will do what's called a net asset value of all the assets the REIT owns. And we will publish that every quarter. And so if you're an owner in the REIT and you decide to redeem your shares, you will get that net asset value with a penalty, right? So whatever that net asset value is, there's like a $200 administration fee to sell those shares, and then a discount on the net asset value. So it's not negotiated. It's just whatever the net asset value for that quarter is what that person would be acquiring it for, and then you're selling it for that net asset value.
Right. But I think there's a second part of that question, which is if the REIT is buying a property from Neighborhood Ventures pool of properties, how do we come up with the value? That's a very fair and honest question, and we're always going to be fair and honest about that. We're gonna get appraisals and or opinion of values. And as another way to look at it is some of the properties that we have had either on the market or had offers on them, and we know kind of what the sweet spot is where the property's valued. So we're going to be very fair to the price we pay, but the most important thing is everybody's still getting their 12% on the return. That doesn't affect the return that you got if you invested in one of those properties or the one property or whatever it's going to be that the REIT picks up. But that's pretty much how it's going to work. But just to put a cap to some of this stuff, there definitely are properties that we bought already that we sold that we would have liked to hold long term. We're very confident in the market and the properties. This allows us to do that, to buy these properties that we know are cash flowing. We've renovated so well in the right locations. It allows us to bring it into the fold. It's not something Jamison and I personally buy. It's something we can put into the REIT and let the REIT own it. And that's, I think, the most fair way to do it.
Yeah, I love that. Another question, how are taxes on the REIT different or the same as normal investments?
So you'll get a statement at the end of the year, very similar to how it is now. One of the benefits of a REIT is there are tax benefits when we distribute the earnings from the REIT to our investors. You have to distribute over 90% of your earnings, which we will be doing. And the benefit is that the entity itself doesn't get taxed. So you don't have this double taxation that you often do in partnerships. So when we send the earnings out to investors, you do have to pay tax on your earnings, capital gains tax. But it works very similar to how it works now, where you get a statement by March 15th and you give it to your accountant or do your own taxes, and it gives you all the information you need to do it there.
And there's one more tax advantage, that operating within a REIT, we can actually do 1031 exchanges with properties. So down the road, if and when we do sell a property, we can sell that, take advantage of the 1031 exchange, not get hit with the capital gains within the REIT, excuse me, so that we basically are able to put more of that money back into investing again.
And all of those benefits flow to the investors.
Right.
Thank you. That's what I was saying.
And then that kind of, when we go to sell properties in the REIT, that leads into another great question. We talked about the 80% that belongs to investors at the sale of properties. Does that 80% directly go back into their pocket, or is that used to buy more properties?
Yeah. So we're going to be operating the REIT for a long time. So when we sell an asset, we're going to take those proceeds and go buy a new project.
Bigger projects, right?
Yeah, the new one. And so the way you can think about it is, as value of these properties go up over time, as a REIT investor, you're getting 80% of that upside. We as a company, we are going to get paid as well for what we're doing. So we're taking 20%. It's a typical 20% model, but the majority of it, vast majority of it, 80% is going to be returned to the investors.
Great. Another kind of easy question. What is the current share price of the REIT shares?
It's $100 per share. So that's kind of our par value. And then as time goes on, you'll see that value increase. And we'd like to keep it simple. So the $100 is our share price. One thing that we talked about is the minimum investment is $1,000. But if you want to make additional investments after that, you can do it in $100 increments. And so that's really fun, because there's a way that, and a feature we're going to announce in the next few months, where you could have $50 a month from each paycheck that you get every 2 weeks, automatically invest and buy a share for you every month. So there's some cool things we're going to do with that, but the share price is $100 per share.
Great. Another question about kind of redeeming shares. When we go to handle the transfer purchase of new shares, will current investors in the project have a first right to those shares? If somebody's selling them, or we're handling the sale of some, do they get first right or first dibs to buy those?
Yeah, there will always be shares available for current investors. Once the fund is fully complete and we're not fundraising anymore, that is absolutely the case. The current investors will have first right of refusal to buy those additional shares. Great question.
There's a few of these I'll let you guys know that are a little bit more detail oriented, and if we don't answer your question here today, we will reach out to you directly and help answer all questions. Is there a maximum raise amount that we are working with currently?
Yeah, the maximum that's allowed under the Reg A laws is 75 million. Our goal is 50 million. So this will take us a few years to reach that. But once we hit 75 million, it will definitely be closed.
How frequently are we going to be doing cash distributions, monthly or quarterly?
Monthly. So they'll be in your cash account on the 10th of every month.
Okay. A kind of a tax question with what we were talking about there. To confirm, REIT distributions would be subject to capital gains, whereas today the distributions are passive income, which is income for most folks. So there's a significant tax difference, correct?
Maybe I don't understand the total amount of the totality of this person's question, but currently, if you own an investment that's held for over a year, it's considered long-term capital gains. If it's shorter than a year, it's short-term capital gains, which is taxed as ordinary income. So for most of our investors, unless you have a really high income, then maybe you're in a different situation. If like you make over $600,000 or $700,000 a year, you may, some of that might be different, but that's generally how it works. This will be the same. It will be long-term capital gains. On the cash distributions, typically your cash distributions, you won't be paying taxes on in the REIT, because that's offset by the depreciation of the property. So this is getting a little bit of the weeds, but one of the benefits of owning real estate is that we depreciate the assets every year. And as a REIT investor, you will get that benefit, which helps to offset your taxes from the distributions you get.
Great.
Yeah. When we sell assets, and this is the case with our current assets too, when you sell those, that's recaptured. Again, I don't want to get too much in the weeds here, but that's the distribution, or the depreciation is a key benefit here.
Yeah, and to find out more information about that specifically, you can view the offering, and in our legal documents, we talk about how your taxes and everything are affected.
And I think we'll do a podcast and we can talk about that. We can have our accountant come in and
perfect.
Talk about how within the REIT model, because the depreciation, we drive the price down to zero, and because of the depreciation of the asset for tax reasons. But the other part is then when we sell, how you don't have the recapture if you use a 1031 exchange.
Yep.
But we can talk more about that. We'll probably have a grease board for that, a whiteboard.
Right.
It's complicated, but it's the whole thing is for the investors that invest in the REIT, investors who are not in Arizona, for friends and family that want to be involved, for non-accredited investors that are outside the state. We now have the right vehicle for us to do this that gives us a lot of flexibility to buy properties and hold properties longer, and to make offers on things because we have a larger pool of money to be able to play with.
Yeah.
Well, I think we've answered a lot of the REIT questions. I'm going to jump to a few property ones before we end out here. First question is, with Venture on Central being 63% occupied, do you expect it to be cash flowing by next quarter?
I got better news.
Oh,
I just heard this morning, because I talked to our manager. We actually ticked up to 75% occupancy with a couple more applications. So yes, we're on that track.
great. Venture on Mountain View has been owned for almost 2 years now. Do you expect to sell it sometime this year?
I think so. The reason why we held off on doing much on that was because of the higher interest rates and the change in the market, a little bit of slowdown in activity. So it's we've got a lot of equity on that property. It would make sense to sell. It's time, but it's this year's probably where it should be sold. And our basis is really low on that too. That's probably why. But yeah, you remember when we started this, the idea was sometimes we'll sell properties after a year if we just get all the valuation out of it, all the equity we build up and get out quickly. Sometimes we hold them longer, and we definitely don't want to sell it just because we feel compelled. We want to sell it and we get the best value out of it.
Yeah, and right now, Mountain View is full. We are cash flowing. We have a really good loan, a low interest rate loan.
Yeah,
It's
right.
one of those. It's like right where you want the property to be. So it's also where we can sell it now, because that's where somebody wants to buy it, a property that's functioning at a high operating.
100% occupied, loan close to 3%. I mean, everything's firing on the right cylinders there.
For Venture at Route 66, you mentioned that we're running it as a short-term rental. Do you plan on holding it as a short-term rental until you sell it? And when you go to sell it, will you switch it to a multifamily beforehand?
I don't know yet. We figured out, because of some of our activity up there and the Airbnb I have up there and kind of surveying the market, that property and some of the smaller units in there, it's going to do really, really well as a short-term rental. So we figured out, we just thought we'd play with that now. I think the average unit up there that's in the short-term rental is experiencing 90+% occupancy throughout this last year. It's amazing. I just saw the Air DNA data. Yeah. So at the point we go to sell it, how do we do it? The big question is, are there buyers that would buy a property like that and understand how to underwrite it? What cap rate are they going to put on it when you underwrite it as a short-term rental? And then lastly, what financing options are available for those buyers? That's really what's going to dictate what we're going to do down the road.
We have a question about Venture on Country Club. You mentioned that rezoning is going well. Are we still on track to get the rezoning finished this year?
Yes. Yeah. I think we mentioned this in one of our other podcasts. We went through the process. There's another property in Mesa that tried to do what we were doing before us. Didn't do what they said they're going to do. And the city pulled back on their understanding or desire to do some of this. Not a big deal. They didn't come at us and say, you're not going to get it. But because of that, we made a decision that we should let it cool down for a little bit and then go back at it. And we're doing that right now. We've had some great meetings. Another big meeting tomorrow with our architect and our attorneys. And we feel very confident that everything's lining up the right way again. And that other project is now a foregone memory. Down the street, whatever they didn't do, the city's over it.
And I'd just say, in the meantime, right now we're in the peak season of vacation rentals. We know the Super Bowl's coming here in a few weeks. We're
And the
gonna have
Open, yeah.
really high. We already have some really high bookings that night and that weekend and the week leading up to it. So the next 4 months are really prime time. So we're managing that property really tight. We had a meeting with our team there on Thursday, both John and I. We walked the property regularly. It's looking really good. So it's doing its thing. And
Plan B is working out really, really well. We're 100% occupied on many days for the short-term rentals. So it's doing really, really well.
Great. Here's kind of a mixed question. You venture on Broadway, would that be a candidate for the NV REIT?
The NV REIT will only be multifamily assets, so only apartment buildings.
Okay.
And the reason why we identified that is because we see the next 10 or 15 years as really being favorable to multifamily. Retail is a different analysis. It depends a lot of where it's located, but there's also headwinds in many retail sectors. You see a lot of the malls that are now defunct and they're converting into something else. So retail's a little different. With the REIT, it will only be multifamily because that's what we have confidence in for the next 10 or 15 years.
Another one kind of on Broadway. As an investor, I've loved attending the different events at each property. Will you be hosting an event for Venture on Broadway as well?
Yeah, we should. I haven't thought of I haven't thought about that, but that's a good idea.
Yeah, and we can have some donuts and some burgers from our tenants.
So if you guys didn't see the last podcast or in some of the comments, that Dunkin' Donuts should be open by the end of February. That's the plan one right now. I was at the property the day. Monday, they're finishing up all the rest of the parking lot in some of the other areas and taking down the construction fencing. So it's gonna look very nice in the next week. And then the Dunkin' Donuts construction people are there every day finishing their interior renovations.
Perfect. Kind of a little bit more back to the REIT, and then we'll kind of call it here. I'm gonna lose my voice on this one.
We all are, yeah.
Yeah. When trying to find the balance with different properties, such as a Mountain View or a Williams, going into the REIT or deciding whether or not you will buy it, will those investors be notified ahead of time to know about it, that it's going to be acquired? And will they have the opportunity to turn their funds into that property or into the REIT to continue earning cash flow?
Yes, that's why we created it, is to give those investors the ability to keep getting the good cash flow and the ownership of those. The difference is now when it's in the REIT, you'll get 80% of the upside going forward as these properties increase in value. One of the biggest things we're going to look at for the assets that go into the REIT are the ones we think will continue to go up in value. Some of the other assets that we buy, we might have done some really good work repositioning them, but the outlook isn't as strong for a 10 or 15 year horizon. Others, it's more strong. So that's how we analyze and decide which ones will go in the REIT. But that's exactly why we created it. We'll reach out to those investors, say, hey, we're going to acquire this. Do you want to roll your proceeds in? And now you have 80% of the upside going forward, which is really exciting.
Perfect. Well, the last question, and we will be done. On a lighter note, when should I expect my holiday wine bottle to be shipped out to me?
I think they're all out, right?
Well, so we've been getting all the names together. So we've received all the lists, and so we'll be sending it out over the next few weeks. So we have to send them back to our vineyard, and then they'll ship them out for us.
Yeah, we can't ship alcohol.
There's some legal issue. I was gonna say there's a legal issue on alcohol.
I thought they were all out. So
we have them well hidden. You just will never know.
Okay. Yeah, we'll get those out to you. Thank you for the whole team here today. Great work, everyone. You can't see behind the scenes here, but John and I get to do the easy part. So thank you, Heidi, and everyone else for all your work, and Heather and the rest of the team also talking to investors.
Yeah, and thank you for joining us. We appreciate you guys taking the time and listening to us.
Yep. See you soon.
Thanks.